What is the real read on retail? The group holding strong as we wrap up a major week of earnings. But we got some news today that could dash hopes of any robust retail rebound. Another 2.4 million Americans filing for unemployment last week. And while we all knew that the number would be awful, it may not be telling the whole story. The total claims exclude hundreds of thousands of self-employed and gig economy workers as well. So with millions of Americans, millions of consumers out of work, which retailers are best positioned for this road ahead? Guy.
Hi, Mel.
Hi, Guy.
I feel it necessary to say hi because I don't see you. So if I were there, I wouldn't have to because it'd be obvious. But so which retailers are best suited in this environment? That's a great question, something we've talked about. I know Steve will talk about Costco, correctly so. Karen has some thoughts on TJ Maxx, but the one I keep coming back to is Dollar General, DG. I think Goldman Sachs just initiated the name with a $202 price target. They report, I believe, on May 28th. People will knock them on valuation, but this is a stock that sort of slow and steady wins the race. You know, Walmart was obviously one of the calls, Target as well. But if you look at the way those two names have traded since earnings, it's a tad disappointing. You have a pretty much Walmart trading up to that previous all-time high and seemingly failing. Similar, although the Target didn't get that high. Target's rolling over as well. That's concerning. So the name for me, and others I'm sure will have other names, would be Dollar General, DG.
I think a question that a lot of viewers at home will have, though, is there are some retailers that have been absolutely taken to the woodshed during this pandemic. And I'm thinking of Macy's. And we saw the stock pop today because the traffic at the reopened stores was moderately better than anticipated, even though they warned of a huge loss that's coming in the quarter. So Tim, how do you sort of navigate this sector when you have so many, and you're going to have so many of these giant outsized bounces simply because things look so bleak and things are a little bit better than bleak?
So for now, names like Macy's and even the Gap stores and to some extent L Brands, these were broken stories coming into COVID-19. And these are stories that, one, you have to always be looking at the balance sheet. Macy's is a name where we spend a lot of time looking at the credit side. Karen talks about the bonds. We talk about the sum of the parts. We talk about the real estate. And at some point, you derive some intrinsic value for the core franchise or not. I think in the case of Macy's, it is a case where the assets, I think, are still valuable, even if the core business is going through a dangerous time that is certainly not going to get better. L Brands, stock rallied significantly, almost 20% today on the fact that they announced they're going to be closing 250 Victoria's Secret stores. Now, the reason why that's good news is because ultimately analysts have felt that the best thing that they can do is downsize the entire company. COVID-19 is forcing a number of these retailers to actually do that faster and more, so aggressively than they would. And I think that's the opportunity. It seems to me, though, what we've seen has been kind of that dash for trash across retail. And I'm not sure that's something that you want to chase. The ones that have been defensive are the names, a Walmart, which to me, I think its best days for this rally are behind it. Not its best days with its consumer group, but again, the largest retailer in the world, arguably, when we talk about the labor market and some of the issues and all that pulled forward sales and a 25 times multiple, I think I've been pretty clear that I don't love Walmart here either.
Right. And the fact that most of the boom happening during the pandemic is happening online. We had been talking about this segment as, yes, that's absolutely the opportunity. That is the wave of the future, Grasso. But at the same time, that is probably the lowest margin way of doing business as opposed to a physical store. So, you're winning on that front, but you're losing on the margin front.
Yeah, you are. But, I hate to make it as simple as have and have nots. And the ones that were weak are it's just been exacerbated when you look at a pandemic. So the Macy's and the Kohl's stores, Macy's is down 68%, has a short interest of 38%. I wouldn't dive into that, but you could see the up days, as you had mentioned before. Kohl's stores, down 64% with a short interest of 16%. So these are names that maybe can have blips in the recovery because positioning was just too offsides. But I don't know how they are going to survive. I don't know that Kohl's stores that is tremendously based on incentives and giving away product is going to survive. But I will tell you, along with Karen, TJX or Target or even a ROST stores, I think the discounters are going to have their hand at any of the goods that were ordered. They're going to just pick a price. and they're going to be able to get whatever they want. So if you think that Costco, Walmart, Amazon, or Target is overpriced here, then you go with a TJX or a Ross Stores, something that you think is going to survive, because I don't know about Macy's and I don't know about Kohl's.
Karen, TJX, a great trade. I mean, it's up 15% today. What do you like about the story? And Tim was mentioning being prudent in how companies are spending their money. TJX is being prudent in another way.
Right. Yeah, so TJX, the quarter was actually awful. Really bad, but it wasn't at all about the quarter. It's about what are they seeing going forward. And they are seeing in stores that are newly opened, some of them are actually up over last year, which is really kind of amazing. So, but they did talk about, suspending their buyback and also cutting their dividend. And I think that a lot of companies should be doing that. They get kind of a free pass right now to cutting their dividend. I mean, a month ago we talked about everybody should, withdraw guidance. Now I feel like if if there's any question, you should suspend the dividend. I mean, companies like Disney are doing it. And another reason that it sort of gives them some cover is if they're going to furlough employees, which TJX did, and they hope it's temporarily, and it very well may be, then paying a dividend while you're furloughing employees might not be the best optics. But I mean, this is a tremendous company, and it was nowhere near its highs, unlike Walmart and Target, which were near its highs, which made the bar very high for earnings. And even though both of them had outstanding earnings, they still traded off in the face of those very tough earnings. This story is a little bit different. It's still below its highs, but as Steve said, I think the other part of their business, what did they pay for their goods? This is manna from heaven from them. This is just going to be. This may be the best pricing they've had since '08.
Yeah, all the MACY'S
so
out there
will be. Here. I mean, it's nice it's a lot, but I think there's.
Like a Pete Nigerian. I misspoke, by the way. TJX is up 15% on the week. It's up almost 7% today.